I don't know about you, but to me it seems like every other YouTuber has become an expert on Chinese real estate and the Evergrande situation. And how come I'm having an investment channel here on the China opportunity, on Chinese equities and stocks, and I just made one video on Evergrande? Well, the reason is, I need to be honest with you guys, I'm not an expert in this topic. So in this video, what I can share with you is, of course, my views on these kind of things, but not claiming to know how these things will unfold, not claiming that I'm an expert on this situation in China, but of course, I've done my due diligence on this topic and I've researched it by myself in terms of evaluating and making sense of this whole situation, because of course I also need to see whether or not my investments in China or even the US stock markets are at risk. And so that's what I can share with you today. So this is the agenda, but what I'm talking about today, almost formal here. Should investors be bothered about the situation? I'm gonna say that, well, I think China and property is in a bubble. Evergrande is not a Lehman Brothers type of a situation. I need to talk about lots of misconceptions and stereotypes that I've once again identified just based on my context and background of working and living in China. And then about Evergrande, unlikely to be kind of a major force on the markets and the movements. And so, yeah, that will conclude my talk here today. And so take this for what it is. It's just my personal opinion. It is my research I'm sharing with you guys. It doesn't mean that you should, based on this video, hold on to your stocks or buy more stocks. Always go out there and find more information. But here's what I've got. So this kind of comes back to where you get your information and which kind of media you consume. Probably most of it currently looks like this here. China expert says Evergrande could very well be the biggest debt crisis in history. And this is of course a very fearful and frightening take here. But be aware that this guy, Gordon Chang, he has always really negative views on China. He's kind of the Gordon Johnson of Tesla, so sharing the same name there, and yeah, always having negative takes. And so I'm not saying that the negative takes are wrong. In fact, already in my first video on Evergrande, I mentioned that I'm also in the view that there is an issue in the housing sector in China, but not only in China, actually worldwide. I think we just have the overall topic that asset prices all over the world are inflated, and this has to do something with the balance sheets of the central banks that are expanding massively. And so you see here the German housing prices index has gone up significantly. And I can tell you, here in Germany we don't have a great history of purchasing houses, not as strong as in the US, in Australia, in the UK, and also not as culturally connotated as in China, where yeah, it's really the necessity in order to start a family that you own your own property and your own car. And such things are not existing in Germany, although still the housing prices here have been going up significantly. And what I'm trying to say here is that this is a global phenomena, and in some ways this is a bubble. But as always, bubbles can rise and rise and rise and continue to rise until it bursts, and it doesn't have to necessarily burst with a bang and very quickly, and not certainly in the moment that we almost anticipating it. And that's also why I mentioned in my last video that I think that this is not a black swan type of event, in terms of that it is super surprising and that this hasn't been known in the past. And therefore I think it's not really super sudden. It is not coming out of nowhere. And that is also why I think this whole situation is not really a Lehman Brothers type of event, although this is all over the media and kind of stigmatized even as this, even by Chinese media, but of course foremost by US media, which are having the views that this could cause a whole new financial crisis, similar that we've seen in 2008, for instance. And so I think there are many reasons to say why this is not a type of Lehman Brothers event. I mentioned already now that it's not sudden, it's not a black swan, but additionally also kind of yeah, how it's composed. So this is around real values, like the real estate is something which is existing somewhere. So these are not about credit default swaps. That was kind of at the heart of the Lehman Brothers crisis, which had no real underlying value and lots of unknowns, like where the risk is for Evergrande and also the Chinese property sector in general, but also maybe the global real estate sector. Instead, for these companies, we know quite certain, like what are the cash reserves, what's the cash to debt ratio, and which ones are nearly bankrupt and others are at high and low risk. Although, of course, this doesn't make it less frightening, and there are still some unknowns, and there might be domino effects. And it's still the question, like how contagious this might be internationally. But the indications are quite different here from a Lehman type of Brothers crisis. So regarding the question, like how could this also affect like international markets, here we see some of the bondholders of Evergrande bonds, for instance HSBC, BlackRock and so on. But for BlackRock, these are a couple of millions, and considering that BlackRock has 9 trillion of assets under management, this is really not something which would kind of shake them. There might be some of these bondholders which are getting a little bit into trouble if Evergrande would not return them and default, but that's what people are arguing. There might be rather a bigger issue on the Chinese than on the global side. But before I talk more about the effects on the whole markets and how this could affect stock prices, let's talk also more on the fundamentals. And here I'm quoting Frank Siren, which is a German sinologist and expert. He's been living like a long time in China, and he's not an expert on property as well, but on the Chinese economy, and he's got a whole advisory team around it. And he, for instance, saying here, like in German, that Evergrande has only 4% of the market share, so not a dominating market share in the real estate sector. And he's also arguing that the banks, which are finally the ones who are affected if the loans are not being paid or need to be used as a bridge, those are state-owned banks, and they don't have a lot of bad debt on their balance sheets right now. So there's only 1.8% of all of the loans out there are bad loans. So that is actually a reduction from 2005, where it was by over 12%. And he is also arguing that the Chinese who are buying these houses, they are not in debt too much. They have to pay up 30 to 70% of capital in a deposit in order to buy a property. They are only allowed to buy 2 properties, so there's not too much speculation going on. And also the interest is between 5 to 6%. And that's very much in contrast to the US subprime crisis, where like everybody could just take out a loan for almost 0 interest, and there was not a lot of deposits to be paid down. And then the financial institutions even packaged that in such different financial products, which in the end made this whole thing blow up. That's not the case in China. Also, he argues, and so I'm now starting to talk about some misconceptions that I'm seeing out there, that only 25% of the Chinese are currently in the middle class, and in the US that's already more than 50%, and in Europe more than 70%. So it takes more than 20 years until China reaches also 50% of a middle class. So he argues there is still a super big demand actually for housing, and we always hear like the overcapacities that are around in China now. And I'm not arguing that there are some ghost towns and there are misallocations and stuff going on, but we always have those typical images coming from China, like, you know, it's communism, there is state plannership, and it's super inefficient and so on, and that they have all of these overcapacities, whereas the fundamentals actually speak to the contrary, that China needs to build many more houses. Another stereotype that I would want to clean up here is the fact that yes, and I've shown those pictures as well, that people went and protesting at the Evergrande office buildings and so on. But these pictures have been kind of overstated in the media, also in terms of making it appear like there is social unrest in China. Whereas these are mostly like very high net worth investors who have purchased products that have like really high yield, like 20% annually and so on. And some of these even are employees of Evergrande, because Evergrande had even such kind of an employee scheme where employees are lending the company money in order to finance their developments and so on. And so this is just a smaller circle, and it's not representative in a fact that we have like protests going on in China, and there is like a social unrest based on this housing situation and Evergrande situation unfolding here. And so with this context, as far as I'm researching it, it seems to be manageable, although it may not be pretty in the way that yes, there will be defaults and there will be a split up, I guess, and there will also more unhappy bondholders or investors in Evergrande, and it is possible that the housing prices will come down a bit and stuff like that. That all won't be pretty. And so I would just urge in analyzing this situation in a way that we don't think in such short explanations. This is a really complicated matter here, and we cannot just explain that by communism and overcapacities and stuff like that. If that would really be the case, then the Chinese state and government would really bail out Evergrande right away like this, but that doesn't seem to be the case. So you will see that the situation is always more complex than you may first think of. We in the West used to bail out our companies that are failing, for instance Lufthansa in Germany during the Corona crisis, as well as during the financial crisis. We have bailed out all of the banks. Now in communist China, it's quite unlikely that the state will step in and just buy out Evergrande. I think what is more likely is that they will deconstruct this issue over time. They have the banks, they have the time. Not all of those debt and loans are due at the same point in time, so the timing is really on their side. As I mentioned, also the macroeconomic factors as well as the real estate value is there. So this gives many areas of ways of managing and dealing with this crisis. And so the big question is, how will this impact global markets? And I think what I've just outlaid is also shared by some of those investors out there. So this is a survey by Deutsche Bank, and only 8% say that the global markets will be significantly affected in a month from now. 15% are in the views that this will be hardly mentioned in the global markets in a month from now and have no impact. And well, the biggest chunk here is 53% believe that it will be mentioned in a month from now, but will have a very limited impact. And so I'm not trying to play this down. Of course, real estate has a significant share in the GDP of China, so there might be effects like a slowdown in the growth. There are effects that we will hear in the news, but all of those real sharp headlines and the fear around it, I think, is a little bit overstated. And I'm personally in the views that the recent stock price movements, although have been sometimes maybe affected by the Evergrande situation, and investors are getting a little bit more conservative and let's say trying to wait and see how this will really unfold. But I would say there are much bigger issues out there that are really significant for the stocks that we are holding, Chinese stocks as well as American ones. Generally, I think markets worry most about a possible slowdown in China as well as the US in the economy. I think in China we already see some signs. And of course, the Evergrande situation may even add to this trouble. So the currency may devaluate, lower GDP based on that. And on the US side, we also have the talks around the Fed could start tapering and lowering their asset purchases, which is not well perceived by the markets, as well as, of course, if China is not growing as much anymore, then also the US economy might be affected, or it could signal that the same thing may happen in the US. We once again have this huge black box of a possible US default that could cost 6 million jobs and wipe out 15 trillion in wealth. It is once again highly likely that Republicans and Democrats in the US that both will agree to suspend the debt limit in order to finance and refinance the government spending. And these decisions may once again come last minute and put pressure on the markets. And so what I'm just telling you there are lots of really big macroeconomical issues. Like if you think about this debt issue, that's much bigger than the Evergrande situation. And so I think the Evergrande story here is blown up a little bit. There might be fallout. Yes, there might be some liquidity issues in some of those even Western funds that have a stake in some of these bonds, so they may sell off other stocks and be more cautious around their cash positions. So generally, as you can see, yes, I'm watching this issue and I'm doing a bit of digging and research and trying to wrap my head around it, but it's not on the first position of the things that really worry me in terms of where the markets are going. In terms of China, I think they will try to, of course, let this not get out of hand. They may want to get and make an example out of this. Evergrande is not a state-owned company, and so I think they will not get much mercy from the government, because also those schemes that I've mentioned before, and the fact that they have also kind of exploited the market in their favor doesn't resonate too well with the government in my views. But ultimately there will be a cool-off period in which they make sure that there will be no systemic risk or risk to the Chinese economy. The overseas investors who have invested in those bonds, quite frankly, actually knowing by the interest, the high interest that it paid, that these are also quite dangerous terms of investing there. Some of them possibly will be not be paid back and may face those consequences. But as I mentioned, I don't believe that this will cause a big fallout or a liquidity crisis on the overseas markets. And so let me end with something which I think was actually the bigger news and maybe underreported on Friday, that the Justice Department has reached a deal with the CFO Meng Wanzhou, who has now returned to China. And frankly, I think this is huge positive news because as I'm reading what's going on in China, this has been a huge issue and deal blocker from a Chinese perspective in the US-China relations. And I don't want to dive into who's on the right or on the wrong side here. All I can say here is that I think the fact that she can now return to China is a huge face-saving thing for China, and thereby I would say the Chinese will be more likely to agree on some of the terms, for example, in the US-China trade war negotiations and stuff like that. So that is actually quite a big news there, which doesn't fill the headlines as much as the Evergrande situation. But this one in the next half year to 1 year could have very positive impact on Chinese stocks in particular, and thereby I would say also on the overall markets, because frankly what I believe is that those two countries really need to get together and work together, and then we are in a better situation. So that's it for now. Thank you guys for watching. Please smash a like and see you in the next one.